Welcome second commerce students to exam tips and tricks channel. Today we will solve 12 marks question. This is a question that has arrived for the exam. This is a question from the question paper. Two partners are Varun and Karan, whose profit sharing ratio is given as 1:1. They are equal partners. Balance sheet is given in the question. So on the liability side, creditors, that appears under the liability side of reconstituted balance sheet. Bills payable, that is a liability, record under liability side itself, 45,000. Reserve fund, that has to be distributed among old partners. Old partners are entitled for the distribution of reserve fund, as they are the equal partners, distribute equally. Capitals, that is balance brought down. Two partners capitals, old partners capitals given, Varun and Karan's capital. Profit and loss account, so profit and loss account, so old partners are entitled for the share of profit, distribute among two partners equally, 1:1, 15,000 each. Cash at bank, that is an asset, that is one of the current asset with rupees 30,000, certain adjustment. Stock is current asset, 45,000. There is no changes with the stock, record as it is. Debtors, 40,000. Firm's provision, that has been increased, so PBD, that has to be shown. Furniture is one of the current fixed asset. There is no changes with the fixed asset. Machinery, the value of machinery, that has been decreased, so we need to make adjustment here. Machinery 15,000. Building is also one of the fixed asset, so the value of building was 92,000. Now there is increase in the value of building, that must be added. So these are the entries from the balance sheet. Creditors, you are asked to prepare revaluation account, partners capital account as well as balance sheet. Creditors, as it is, record under liability side, bills payable, liability side. Reserve fund, it has to be distributed among old partners only. Old partners are entitled for the share of reserve fund. Capitals, balance brought down. Profit and loss account, that must be distributed among old partners only in their old ratio. Cash at bank, that is one of the current asset, record under asset side. Stock, current asset, asset side. Debtors with certain provisions, that must be deducted. Furniture, fixed asset, there is no change with the values of the furniture, record as it is. Machinery, value that has been declined, that is one of the fixed asset. Building is also one of the fixed assets. On 1/4/2022, so 1/4/2022, the date has to be recorded. Daman, who is the new partner, admitted into the partnership business for 1/4 share. Daman should bring 50,000 as capital, so it has to be recorded as cash account with capital amount 50,000 plus goodwill amount 25,000. So 75,000, that appears under new partners column. So it must be added to this current asset. So 50,000 he brings in the form of as capital, as well as 25,000 as goodwill. So altogether it must be added, and that will be 1,05,000. So these are the entries that has to be made, and this goodwill amount 25,000 is the goodwill amount that must be distributed among old partners. So this goodwill amount is brought by Dhaman, that must be distributed among Varun and Karan. So the entry will be new partners capital account data to old partners capital account. So new partners capital account. So only 25,000 goodwill amount that has to be taken into consideration. So as they are the equal partners, usually goodwill amount that has to be distributed in the sacrifice ratio, but in this question sacrifice ratio is not given. We need to consider old ratio. So 25,000, as they are the equal partners, 12,500, 12,500. New partners capital account data to old partners capital account, Varun's capital account, Karan's capital account, Karan's capital account. This is treatment of goodwill. One more entry, new partners capital account data to old partners capital account. Old partners capital account has to be credited. 12,500, 12,500 has to be credited with new partners capital account, the month's capital account. This is how goodwill that has to be treated. The value of machinery that has been declined, value of machinery that has been reduced. So machinery account, it has been reduced by 10%. So 15,000 into 10%, that will be 1,500. PBD that has been increased, provision for bad debts, that has been increased by 4,000. What is the actual increase that appears in this revaluation account? Increase in PBD that has to be debited, decrease in PBD that must be credited. So earlier it was 2,000, now it has been increased by 4,000. So there is increase, and in the balance sheet what is the total provision that has to be revealed? So 40,000 minus 6,000, that will be 34,000. That must be deducted. 6,000 has to be deducted. Building value that has been increased. So building, it has been increased to 1,20,000. Earlier it was 92,000. Now 1,20,500. So there is increase of 28,500. So in the revaluation account we need to disclose decrease or increase in the values of the assets. So the value of building that has been increased, so increase in the value of building that must be credited, and there is increase of 28,500, and the present value of building that is 1,20,500. Now this is the present value of building. So these are the entries that has to be made, and finally these accounts has to be closed. So by the way of finding out the total, so here total is 28,500. Write the same total under and debit side also 28,500. From 28,500, as 1,500 as well as 4,000 is deducted, so 23,000, that is the profit transfer to partners capital account. So this profit loss has to be transferred to debit side of partners capital account. Profit has to be transferred to credit side of partners capital account. Only two partners are entitled for the share of this profit. Old partners, as they are the equal partners, so it has to be distributed equally, 11,500, and it must be transferred to credit side. as revaluation account. So this is the profit that is transferred 11,500 as they are the equal partners 11,500. If there is a loss, then it has to be transferred to debit side. Now we have closed revaluation account. Now we need to close partners capital account. It has to be closed. Partners capital account has to be closed. So it has to be total 75,000. Write the same total under debit side also. From 75,000, as this goodwill amount is deducted, so 50,000 is the closing balance carried down. 50,000. Again, currents total will be 86,500. Write the same total debit side also. So there is no values to deduct. Write the same value as 86,500. Again, overruns total is 1,06,500. It has to be written under debit side also 1,06,500. There is no values to deduct 1,06,500. So this closing balance that must be considered as capital account of all the three partners. All the three partners will continue in the business. So old partners as well as new partner, the one who is the new partner. So they will further continue in this business with the capital amount of 1,06,500, 86,500 as well as 50,000 with the capital amount. So finally it has to be totaled. So stock, there is no changes with the stock. Debtors, the value of debtors that has been increased. Total 2,000 plus 4,000, that will be 6,000, that must be deducted. Furniture, no changes. So machinery value that has been declined by 1,500. So now the present value is 13,500 and building value is increased. So make the total. The total of this liabilities will be 3,28,000. 3,28,000, that has to be equal. Both liabilities that must be equal to assets. This is how these three accounts, revaluation account, partners capital account as well as balance sheet as on the date of admission of a new partner, that has to be prepared. Thank you.